Today is currently Friday, and today I want to go over a simple trendline break smart money trading strategy for Forex trades if you're struggling to find a working strategy that's for you. So I just basically wanted to make this video and explain how to do it. So the first step is on TradingView. Right now I'm on USD JPY. So as you see, when we zoom all the way out, the overall outlook for UJ is bullish because we have higher highs, higher lows, higher highs, higher lows, right? So the strategy I want to show you guys is, if you look closely where I have all these higher highs and higher lows, when I drew with the lines here, we had two highs, lows, lows, blah, blah. I want you to notice currently at the top, we had structure, we had higher highs, higher lows, higher highs, higher lows here. And where I mean here is we had a high here, high here, high here, high here, and we had a low here, low here, low here, low here. I know it's kind of sloppy, but you get the point, right? So because I'm looking to long and buy Japan, buy USD Japan on the long term, here is what I want to show you guys. So I'm planning on buying down here, and the reason I'm planning on buying in this level is because we had a bunch of news, high volatile news, and because of that news, it caused the markets to become unbalanced, because a balanced market is when the market is up, down, up, down, up, and then down, up, retrace, down, up, blah, blah, blah. That's a balanced market. But when there's high volatile events in the market, in the Forex market, like news and things like that, sometimes instead of up, down, we get these large impulse movements like you see right here. Okay, so when we're going up, you get these large impulse movements like up, down, and that's because there's a lot of volatility in the market. And what happens is, because of that, these gaps, so-called imbalance gaps, get left behind because the market hasn't balanced itself out yet. And because it hasn't balanced itself out yet, we can actually trade back to these gaps, because when the market leaves gaps that are big like that, blah, blah, at some point, even if it does a little tiny correction and goes up, at some point, these gaps down here have to get filled, whether if it's in days, months, years, blah, blah. And so what happens is, at the top of this range, the market will have equal highs and higher lows, and it'll look perfect like that. But what will happen is, when there's another news event and the market has to come down to fill in the gaps down here, what will happen is the news will cause the market to come down and reverse and break to the downside, sort of like this. So the market will be up and the market will break to the downside, breaking this previous structure there. And then when the market does that, a gap will be left behind up here that you can hopefully, for most of the time, price will come back and hit that gray box. And then once it hits that gray box, you can enter there on that gap, and your take profit will be the gap that it left behind, you see? And then your stop loss will be the gap candle itself, blah, blah, blah. And you can actually trade that on the way. And this is called my trendline break strategy, because yeah, you can trade any trendline break, but that's dumb, because you need to know the right trendline. Like, yes, the trendline break strategy works, but you need the right one to trade with. You can't just trade any trendline that breaks. And the reason we're trading this one is because we know that there's a gap that was previously not filled and left an imbalance in the market here. And the only reason we entered is because we saw the market up here break the current structure up here with hopefully high volume. You should see some red volume on the bottom of your screen when that happens. So guys, yeah, it's that simple, and that's what we're going to be doing over here on UJ. So right now on UJ, we're at a high. The UJ's at all-time highs and blah, 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 blah. But right now, this morning, I saw UJ break my previous trend line right there, if you notice, because I have a light gray trend line all along here, and it just broke my trend line there. And so what I'm waiting for is price to come to where it's at right now, to that gray box where you see there, and reverse. And when it reverses, before I can enter now, or if you want to be extra secure, you can wait for price to break this mini trend line. Okay, so we're on let's go to the 5-minute. What you can do to enter here is you can wait for price to break this trend line like this on the blue line, and then wait for price to come back up and reverse, and then get in on this entry and get in down, and then your take profit would be the next lows slash next the next low, the next low or gap you have. So for me, it's going to be this, either this small gap or the bigger gap. And I hope you guys kind of understand where I'm getting to this. And the reason I'm expecting a reversal point right here is because if you look at where the arrow is pointing on the left side of the screen, that, if you notice the size of difference, this is how you know what smart money is. So when people talk about Forex trading and trading smart money concepts, smart money are the people in the Forex market who simply move the markets, because in order to move the markets, you need volatility, which is large movement. So if you notice where the arrow is pointing to, do you see how these candles right here are bigger than all the previous black candles right here? See how above here, all these black candles are small? When we go right here, the second it broke that trend line, it left these large candles showing you who it was that broke the trend line, which is smart money. In the Forex market, smart money are the banks and institutions, because the chart that you're looking at on the screen right now is simply a reflection of what's happening in the real world. And the banks and institutions, specifically in the Forex market, control this market. So that movement that you see, this trendline break, was because of U.S. dollar news, right? And that created all the supply. So when people say they trade supply and demand, that move created all the supply. And so the right thing to do is you can either wait for a reversal at this zone and wait for it to break, confirming that we're going to continue downward, or you can enter right away. So I hope you guys got info out of this. And that's basically how I trade the trendline break strategy when I'm waiting to, and it's actually a short-term trade, really, because on a long term, really, I'm buying the Japanese yen, because we're in up structure, we're in bullish structure, because I have higher highs and higher lows on the higher time frame. But we're not buying right now. That's the thing. So people that see a stock, what they'll usually do is they'll buy at the top when everything's all green. They'll buy at the top because they say, oh, it's going up. So they buy right at the top because they have a fear of missing out. And what happens after they buy is, after they put in all the orders, the market will come back down before going back up. And the reason it does that is because there's other gaps that it has to retrace before, because you can't, you won't make money buying something at the top of the market. You won't make money buying something at the top, because that's when it's already expensive. You need to wait to buy something at a discount level. You buy things at a discount when you sell things at a premium price in the market. A discount price in the market would be to buy low. Like when they say buy the dips, that's buying at a discount price, because the dip, the price is at an all-time low, or is at a low point where prices are cheap and you can buy the dip. But if you're trying to buy when the price is high, that's dumb, because the price will either continue going up or come back down because it's already high. So I'm not looking to buy yet. I'm looking to buy when it's down again. So now I'm looking to sell, especially because we had that trend line break. And not only did we have that trend line break, that trend line broke with high volume, because the candle, which was right here on the 1 hour that broke the trend line, this candle right here, if you look down here on the lower left side of the screen, this volume candle is that candle. And then if you notice, the red volume got higher. So the selling volume actually increased as the price broke that trend line. So I hope you guys got value out of this. But yeah, that's pretty much all I wanted to talk to you guys about today. Peace.